Hey guys, this is Money Value. My name is Olga and I'm back with a new analysis for you. What I have for you this time is Intel on Intel. It's an American multinational corporation and technology company with a market capitalization of over $235 billion and a current stock price of over $58. Intel is headquartered in Santa Clara, California, in Silicon Valley. There is no semiconductor chip manufacturer that would be larger on the basis of revenue. It's ranked 45 on the Fortune 500. It manufactures microprocessors, motherboard chipsets, network interface controllers and integrated circuits, flash memory, graphic chips, embedded processors, and other devices that computers need in order to work. Brief history lesson. The company was founded on July 18, 1968, and this event mentioned three figures: Robert Noyce, Gordon Moore, and Andrew Grove. Its name comes from two words, integrated and electronics. Back in 1972, Intel actually tried their hands on digital watch market and bought Microma that was famous at the time. It bought them some profits, but then 6 years later, there was a decline at the watch market, so they sold it. They say Gordon Moore couldn't stop wearing the watch even when the years pass by. And before you get bored and we get to everything else, let's talk about what is and what's going on with them stock market wise. Let's go quarter by quarter, starting with July. The second quarter results were better than expectations, but it didn't really help. Intel also announced that their next generation 7nm chips would be delayed until 2022. This news wasn't exactly what investors wanted to hear, and as a result, shares fell 20%. The next decrease you can see on the graph happened in October after the third quarter report was out. Intel beat Wall Street's expectations again, but it had some kind of trouble with its data center chip sales. They were kind of disappointing. Unfortunately, it was considered as a sign of company losing its lead in computer chips. Anyway, when the fourth quarter report was out, it was clear that Intel beat all the expectations again, but its stock fell almost 10% the day after that. Maybe they just have to stop those reports? But several decreases of the stock reports were actually great, aren't the only problem Intel faced last year. They had to accept bad news in June when Apple said it was moving from Intel's chips to its own ones for the Mac computers. According to the investment bank Morgan Stanley, Apple was the source of 5.8% of revenue for Intel. Anyway, the switch would take about 2 years. Another one happened in December when it appeared that Microsoft was designing its own chips too. Look at the graph. When the news was out, the stock fell 6.3%. Next time someone says you're sensitive, tell them to check the stock market out. Now that we're done with a quick update on the stock front, I have something else you need to know. Less than a month ago, Intel announced they are replacing their CEO. Bob Swan will remain on this position until February 15, and then his place will be taken by Pat Gelsinger. Pat Gelsinger has a wide experience. He's been a CEO of VMware for a decade and the president and chief operating officer at EMC, but his first serious job was at Intel when he was 18. Pat spent more than 30 years working for the company, and here he is again, coming back. And since this channel is about investment, the stocks went up on this news. Here's what he plans. Yep, there is a list. First, to design and build great products by itself and in conjunction with its partners. Second, to become more agile. Third, to execute so that the customers can rebuild their confidence in Intel and its supply chain. And fourth, to restore the company's culture. If the list isn't enough, I also have a quote. We will have a groovy and maniacal execution, data-driven culture, and we're building that as a part of this company. He wasn't very specific since formally he isn't an employee yet. He is confident that there is a progress in resolving issues with its 7nm process technology. He doubled down the company's commitment to in-house manufacturing, but said Intel will use outside fabs for some chip production. We'll see if he manages to outcome Intel's manufacturing struggles that are not secret after becoming a CEO. Well, I was looking for info about their new CEO. I checked their Twitter account and here's what I saw. And the best description, I guess, would be Intel getting back at Apple. By the way, at the time of shooting this video, there are no lawsuits filed. Anyway, let's get back to the subject. Today is February 3rd, which means that tomorrow the company goes ex-dividend. It means it's the last day investors can buy the stock to receive dividends in March, which would be 35 cents a share. Their dividend yield is 2.38% and the current stock price, as I've already said, is over $58. Dividends are usually paid out of companies' profits, and if the first are bigger than the second, there's a good chance of dividend cut. Last year, Intel paid out 27% of its profit, which is a good number. Their dividend is covered by profit and cash flow, So my guess, there is no risk of cut. Intel's earnings per share have been growing at 16% a year for the past 5 years, and it makes Intel a good company from the dividend stock perspective. Their low payout ratio means that the company is likely reinvesting in its business. One more positive thing. Intel's top competitors include IBM, Samsung Electronics, Nvidia, AMD, and Oracle. All of them are engaged in information technology products and services and have been for a long time. Personally, I'm more concerned about Apple and Microsoft because it's not clear yet how the market will react to their own chips manufacturer, and more importantly, how it will influence Intel's sales. I wish I had something to say on the bright side here. There is something else you might find interesting. Intel actually has their own museum. It's located in Santa Clara, California, and contains various historical artifacts. At first, it was just an insider thing, but in 1992, it was open to public. I have more. Intel was the first company to make employees wear coronavirus gear in 1971.
What a twist!
I'm just kidding. The thing is, microprocessors need to be fabricated in an environment that is ultra clean, so the company had to make those bunny suits a part of the dress code. They even have an area called the clean room. It's thousands of times cleaner than a clean hospital. Can you imagine? Okay, I got distracted again. Time for the bottom line. Intel is not the worst stock to buy right now, but isn't the best either. When there are major changes in the nearest future, and new CEO is definitely a major change, you never know if your purchase will be a win or not. There is a high debt to equity ratio, almost 45%, and it only increased more than 7% over the last 5 years. And some analysts believe that earnings will decline by 2% per year. As for the volatility, Intel has been pretty stable over the past weeks and year. And that's it for today. Remember, the decision whether to buy or not is always up to you. I'm just giving you some information. Stay tuned, I'll be back with more. Don't forget to hit the like button, subscribe, and share this video with your friends. Stay safe. See you soon.